From Masterland Investing University. I just want to welcome everybody today. Thank you for tuning in to our video. Also, I want to give a thanks to all our Facebook group members. Things are really going great. First of all, I want to introduce myself. Once again, my name is Dana Brown. I've been a real estate investor for about 30 years. I was super successful, and at this point, I've decided I really want to just teach. I still dabble in real estate, but I have a wonderful array of things I'd love to teach everybody if they're interested. So today what I want to address is the 4 phases of a real estate cycle. My opinion, I think it's key to successful real estate investing, especially the land investment business. I've watched a lot of videos, read a ton of books. A lot of books touch base on the four phases of a real estate cycle, but they really don't stress the importance of it. All the years I invested in real estate and land especially, I've made my most money by timing the market. Matter of fact, I timed the market a few years back. Some people call it luck, but it was actually just labor under controlled knowledge. I had studied it. My partner and I got involved when nobody was really buying. We gobbled everything up. In a matter of a couple of years, I think I did a little over $3 million myself in gross profit. So anyways, let me get into a little more detail about the 4 phases of a real estate cycle. The first phase is recovery phase. Second is the expansion phase. Third is the hyperinflation, which I call the bubble phase. And the fourth part is the recession phase. There's a lot of things that control that whole cycle. Historically, they say it's about 18 years a full cycle, and it's cyclical. I mean, that's the way it works. For the land investing end of it, you got to be a little more careful. There's other indicators that I watch to really see what's going on. But I'm going to explain it in a simple way. The way I look at it is like this. There's a couple analogies. The first one is stand out in the yard, you take a ball and you whoop it as high as you can in the air. The ball is going to go as far as it can up, and then it's going to come to a point where it stops. It starts to fall, and once it falls, it hits terminal velocity, and you know what happens after that. So another analogy with this whole cycle is I look at it as like a hurricane. The hurricane hits, that would be really the recession period. So it comes along, it blows everything apart, trees are down, fences are down, stores are shut down, there's no work, everybody's scrambling, walking around like they're zombies. Really confused, don't know what happened. I look at that as typically the same as the recession. The recovery period is actually the stage of after a hurricane when you see people out in their yards, they're starting to clean up a little bit, fences are going back up a tad, nothing's back on, there's no lights, there's no power, most of the stores are shut down, there's really no traffic, but things are slowly starting to get back together. And then you have the expansion period, which is the expansion phase. That's when everything's pretty much cleaned up. Things are looking a lot better. There's traffic again. The signs are back up. The traffic lights are working. Stores are starting to pick up again. It looks like the economy's starting to move along in that area that was hit by the hurricane. Then what happens after that, we get into what I call the bubble, which is the hyper supply phase. And that's the stage where everything gets back to normal. Everybody seems to forget about the storm that just hit a while back, a few years back, or a couple years, or 10 years back. We all have short memories. And at that point, everybody's out spending again. Prices are going up. The unemployment's at one of its lowest points. There's very few foreclosures on the market. Everybody's just doing their thing, happy-go-lucky. Banks are lending money. Realtors are pushing the numbers up. And obviously what happens is like that ball that hits that point that stops, this is us back into a recession. So as far as a land investor goes, the way I've done it is I've always told everybody if you really want to try to time it, and there's not a perfect analogy to it, but you got to keep your ear to the ground, you got to keep your eyes open. If you're farming a particular area, the way I've always done is I'm typically always pulling up building reports, permits from the county or the city. I'm always listening to listening to the news, reading papers. Visually, what happens is you see during the recovery period, there's a lot of foreclosures, a lot of unemployment. So at that period is usually a great time to buy because the prices have been dropped. It just come out of recession, so there's no consumer confidence. The realtors have lowered their prices so much just because they want to move products. So they're a great indicator too. The real estate agent, Zillow, a lot of sites, digital marketing, that you can look at these sites and see the numbers. Now, when you see the numbers crash like that, most people have no confidence. Nobody wants to touch property. I've made a lot of money like that. If you have a little buy time, you can buy at that point. And then it gets into the expansion stage. Most landowners, most realtors. The realtors more so, they see it, they start to move, to creep the numbers up a little bit. There's not much activity. People are starting to shop around again for land. Land's a little different, like I said, than bricks and mortar, but once you learn it, once you get it, you can make a fortune. I have. So that's kind of like the expansion stage. The things are starting to come back together again. And then as you see, like where I'm at in Florida right now, I believe we're more closer to a hyper supply or the bubble stage. You could see construction just cranking along. If you look out in the neighborhood, there's trucks going by. There's hardly any unemployment. Very few foreclosures. If you're in the bricks and mortar investing business, you can't find any. The prices are almost back where they were before the recession years ago. All these things to me are indicators. So I watch that. So as far as an investor goes, if you can dial in and just practice and learn, study, keep your ear to the ground, keep your eyes open, talk to people. If you have friends or yourself, you're in the blue collar type of business in that arena, then you know firsthand when you hear the builders, they're laying off guys. The help wanted signs disappear. There's nothing happening. That's typically the recovery stage. Expansion stage, like I said, things start moving again. The dust is clearing. There's signs up for looking for new labor. There's more houses on the market. Hyper supply is the stage I believe we're in right now in most of South Florida. We've gotten almost back, if not to the point that the prices are exceeding what they were during the last bubble. And now I'm seeing the prices start to drop a tad. So what's that tell you? I'm not necessarily saying it's going to go into an inflation period, but the numbers are starting to come down. The realtors are realizing there's a lot less shoppers. The interest rate's gone up, I don't know, 1/10 of a point or something like that recently in the last few months. So what happens is consumer confidence is dropping a little bit. The realtors in turn have to drop their prices a tad. If you time it right and you're watching the market, mark my words, if you do this right, if you haven't got the money, you stack up some investors, you tell them what you're learning, what you understand about this cycle. You position yourself to gobble everything up when it's not worth anything, and then you just hold a little bit. I was lucky enough with my partner that everybody thought we were nuts. They called us lucky at the end, but it's nothing to do with luck. We positioned ourselves in many places within Florida and just gobbled everything up we could. We gobbled up as fast as we could. We bought stuff at $1,500 that in less than a year it went to $16,000. Now I would explain that, or I'd actually say that as an example of between the expansion period and hyperinflation, which is the bubble. A lot of guys that we bought property and sold to that I call the sixth and seventh investor out, meaning they came in late, they didn't inspect what they expected. They bought properties from myself at, excuse me, $10,000, $12,000, expect them to go to 20. They didn't do their homework. They didn't look at the property appraiser site and see what those numbers were a year earlier. They get caught what I called with their pants down. They held a lot of product. Eventually, they lost most of their investment. Most of them had to file bankruptcy. I was smart enough and on the ball enough, myself and my partner, that we bailed on that. As far as I'm concerned, that right there is one of the key elements. If you really want to make some serious money and position yourself and have tools in your box, study the 4 phases of a real estate cycle. Do what I said, because it's a little different than the bricks and mortar end or the commercial end. You're going to get a lot of banking numbers. Realtors are a key point. It could be sunny here and stormy on the West Coast. So wherever you are is different. So don't gather numbers, banking numbers, interest rate numbers. There's a lot of things that will correlate to part of the phases. But the key as a land investor, it's a little different. You got to check Zillow, check with the realtors. Always look and see what the unemployment rate is. See where the numbers are. If realtors are saying the numbers are going down, you know from what I just taught you, it's a chance to start getting in position, get your tools in your box, get some money together, because nobody wants to buy in the recovery period and even the expansion period. They just don't seem to. The one so-called investors seem to want to buy when everybody else is an investor. They don't want to miss the boat. They want to be an investor, make a lot of money, and they buy on the hyper supply end of it, which I call the bubble. That's my lesson for the day. I have many other lessons that are coming up. If you want to join us on a Facebook group, it's Masterland Investing University. We'd love to see you. Stay tuned. There'll be a lot more videos coming up. I thank you for listening. I'm out. Have a great day. Bye-bye.